and welcome to the Assay. Today I'm here at Mining Indaba in Cape Town with Peter Gianulis, president of Carrelton Asset Management. So Peter, thanks for joining us today.
Hi, thank you very much. I appreciate it, Amy.
Absolutely. It's always great to catch up around the world. So let's start just looking into your background. And you've got quite a diverse experience in the industry.
So I started back in the mid-90s at Solomon Brothers. And when they were starting a hedge fund, I had just graduated from the university. And I was fortunate to be selected to join their hedge fund. And we grew that to almost $5 billion over the next 10 years. I was a partner from 2003 to 2005. And then ultimately spun out of Citigroup because we had gone through a series of mergers. And in 2005, we spun out to create a fund called Saranac Capital. I used that to spin my own company out there, creating Carrelton Asset Management in 2005 and moving from New York to Miami, where I started Carrelton and grew that fund to a fairly decent sized fund, focuses primarily on the junior mining and resource sector. So we did that from 2005 to about 2016. Carrelton still exists as an advisory and an investment management company. But from there, I went and took a position as the CEO of Allegiant Gold. And I've done that from 2019 to 2024. And Allegiant Gold is a junior mining company based in Tonopah, Nevada, where it's developing one of the larger gold silver assets in outside the town of Tonopah called Eastside.
Okay, sounds great. So I want to focus on kind of your investment side of your career. So maybe you can talk a little bit about the different ways that you like to assess a junior miner. So, what makes a company stand out? How do you look at these companies?
Well, I mean, there's been really two evolutions in my 25 years career. The first part of my career, there was a very large bull market going from 2004 to about 2011. And the last 14 years has really been a bear market in the junior mining sector. The TSX Venture is closer to an all-time low, while gold and silver are at close to all-time highs. So I think that your investment approach has had to change. I think that some of the characteristics that make a good junior exploration company, or we're talking about juniors as opposed to a mining company, and what we used to do at Carrelton, we were fairly successful at picking some pretty good winners. And you have to realize you're going to have a bunch of winners and some losers as well. But we had a pretty good track record during our run. And I think you start with management. I think management is important because the reality is that good management will have to pivot many times during the life cycle of that mining company or that exploration company. I would say the second most important thing today, which has changed, is jurisdiction. I've talked about for the last 8 years that we're moving from a unipolar world to really a bipolar world, where a U.S.-centric led part of the world, and then China, Russia type of part of the world, making certain jurisdictions very, very complex. And then geology obviously is important. What type of mineral you're going after, and are there other mines around where you're trying to develop something? So there's a lot of characteristics. I would start with jurisdiction and management as being the top two. I'll add, given that we've been mired in this bear market for the last 14 years, I would say making sure you've teamed up with good partners. So at Allegiant, we have Kinross Gold as a 10% owner, and I would highly encourage other investors that are investing in juniors to make sure that the junior that they're investing in has very strong financial backing, whether that's from a corporate sponsorship like a Kinross or a Newmont or a Barrick if you're doing gold, or a very strong investor base, because juniors invariably have to raise money at every stage.
Absolutely. I mean, beyond kind of looking at a company itself, I'm sure kind of understanding the dynamics of a commodity are also quite key for this type of role. So, how do you kind of keep track? How do you track how commodities are pricing, and in terms of?
I mean, my background's a little bit different. So I come from that industry where I ran a hedge fund and worked as a senior person at a major hedge fund. So I had a pretty good understanding of capital markets and commodities. I'm not sure many other individuals in this industry have a good grasp of the macroeconomic factors that drive commodities, but I think it's hard. Even people that have spent their whole career, like myself, in commodities, will not necessarily have a good idea of where commodities go the next 6 months or a year or 2 years. But I do think there are macro trends. Gold and silver are one of those. I like to say gold is, most people focus on the supply demand dynamics of gold and the production. The reality is 90+%, 95% of all gold produced is above ground. So the demand fundamentals are equally or actually more important than any type of production dynamics. However, uranium is different. And I would argue that copper and silver really depends significantly on the production side of that. And that will determine longer term prices for that. Finally, I'll add that all commodities are priced in US dollars. So understanding where the US dollar is going to go is another variable that most people really don't focus on. And you have to have a viewpoint on the US dollar because that will invariably affect the price of the commodities.
Right. So really just understanding how kind of the macroeconomic, geopolitical all impacts the commodities.
Yeah, I would start with currency, actually. And then I would start with each individual commodity has a different supply demand fundamental and dynamic.
So obviously with Allegiant, you're into gold, the gold space. What are some other kind of key commodities of interest to you these days?
Well, at Carrelton, we were one of the largest investors in uranium from 2004 to 2011. And I personally, and I'm putting my investment cap on, not as Allegiant, I do think uranium is one of the best commodities out there right now. I think gold is, just from a commodity pricing perspective, I think gold is fine. I would consider it good. But if I looked at from an investment perspective, would I buy gold as a commodity? Not sure. Would I buy the juniors? 100%. Because there is a disconnect between the value of juniors relative to the gold they have in ground. Actually, the lowest it's ever been in the 25 years I've been in this industry. So if you look at what juniors and inferred resources are going for today, you're looking at companies that are being valued at $10, $15, $20 a resource ounce for an in situ inferred resource, but gold's $2,800 and it may be close to $2,900 this morning. So inferred resources are being valued at less than or close to 0.5% of the value of the gold they have in ground. To give you some context, the historical valuation has been closer to 4%. And in a bull market, they've gone up to 8 to 10%. So there truly is an opportunity to make 10, 20, 30 times your money just on a reversion to mean for value of juniors relative to gold prices.
Interesting. So, I mean, is that really kind of part of, understanding the valuation of these junior companies? Certainly, I would think would make investing quite exciting or quite interesting. So
I haven't been that bullish for a few years, and this is the most bullish I've been since 2004, and that was the start. Even though I was about a year early, the run from 2005 to 2010 was unprecedented, going up 5, 6, 7 times. And that's on average. There were many companies that went up 20, 30, 40, 50 times. I think we are very close to that same dynamic where juniors are very, very cheap relative to the price of most commodities. But in gold and silver, it's extreme.
Interesting. And I suppose just to wrap it up, we've just had you at the 1-to-1 Mining Investment Cape Town, and now we're here at Mining Indaba. What were some of your key goals in coming over to Cape Town this year?
Well, I had never been here, so it was the first time I was there. Was here to experience it. I thought this was, at least from a 1-to-1 perspective, was the best conference that I had been to, and I've been to a few of them. Well, Cape Town's wonderful, but the actual organization of the conference was great. The quality of the investors were great. Just the other companies, having a chance to speak to them, because I do have I kind of wear two hats. One as the CEO of Allegiant Gold, but I also wear a hat as an investor. So at times I look at other companies that are my peers or competitors, and I think, well, maybe I would like to invest in that company as well. So for me, it's great to be here in Indaba as well. But the real value was 1-to-1 because it is smaller than Indaba, and you have a chance to really get to know the companies.
Sounds great. Well, we always look forward to welcoming you back to One to One.
Well, thank you.
Thanks, Peter.
Thanks, Amy.